Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today we re-talking about one of the most impactful events of the year in the crypto market. On Thursday, Bitcoin reached a new historical high, touching the $118,140 mark before slightly retreating to $117,738 at the time of writing. This move represented an impressive 6.4% gain over the last 24 hours, solidifying itself as one of the largest daily gains recorded in 2025 and validating the expectations of many analysts and technical traders. With a clear breakout above the $112,000 resistance, BTC accelerated quickly toward the $115,000 zone, previously tested but now surpassed with strong momentum. The current technical scenario suggests minimal selling pressure in the short term, meaning the path is open for further upside, potentially reaching $120,000 and even surpassing $150,000 if this momentum continues. The behavior of Bitcoin during this latest rally is particularly interesting due to its technical profile. The Relative Strength Index, one of the most widely used indicators to measure overbought or oversold conditions, currently stands at 74 points, well below the critical level of 80 and far from the historic peak of 93 points recorded during the 2021 rally. This shows that despite the recent surge, the market hasn't yet displayed clear signs of exhaustion or extreme buying pressure. Many experts see this as a positive signal, indicating that the rally still has room to grow without immediate corrections. In addition, the daily chart reveals strong candlestick patterns, with increasing volume and aligned moving averages supporting the ongoing uptrend. As a result, many analysts are updating their projections and considering much higher levels for BTC in the coming months, especially if there is confirmation of continued institutional inflows via ETFs and increased global demand for scarce decentralized assets. While Bitcoin was rising sharply, the derivatives market experienced a true tsunami of liquidations. According to data from CoinGlass, over $1.1 billion in short positions were liquidated on July 10th, marking the highest level since June 6th, when the market also faced sudden buying pressure. Of that total, around $680 million came directly from bearish bets against Bitcoin, illustrating just how caught off guard many short sellers were by the sudden price surge. Although this level was later retested, it generated automatic portfolio adjustments and reinforced confidence in altcoins. Overall, the market saw a total of $1.3 billion in liquidations, with only $129 million coming from long positions. Cross token was among the biggest losers, with $1.44 million in shorts being wiped out, showing that even smaller projects can be affected by sharp moves in BTC and ETH. The strength of Bitcoin also echoed across traditional financial markets. On Friday, Bitcoin's market cap hit an impressive $2.34 trillion, temporarily surpassing Amazon's valuation. While it eventually fell back below that level, BTC remains ahead of Alphabet and is now the sixth largest asset globally in terms of market capitalization, behind only Apple, Microsoft, Saudi Aramco, Alphabet, and Meta. This figure is symbolic, but it reflects Bitcoin's growing maturity as a digital store of value and its increasing acceptance within the global financial system. Institutional investors are beginning to see BTC not just as a speculative commodity, but as a strategic component of capital allocation, especially in times of persistent inflation and low interest rates. As a result, Bitcoin continues to solidify its position as a core asset class, offering liquidity, transparency, and protection against monetary devaluation. Another important insight comes from the CryptoQuint platform, which analyzed UTXO dynamics to understand who is buying, selling, or accumulating Bitcoin. The data revealed that short-term holders, those who have owned BTC for less than 30 days, now represent only 15% of the market, a significant drop compared to the 30% seen during previous all-time highs. This could indicate several things. First, that inflows of speculative capital have decreased, possibly reducing short-term volatility. Second, that control of the asset is increasingly concentrated in the hands of long-term holders, which generally leads to greater price stability. Third, that any new wave of buying might struggle to find available supply, increasing the chances of rapid, unopposed breakouts. This type of market structure often precedes major moves, like those seen in 2021 and early 2024. If this pattern repeats, Bitcoin may only be at the start of a new phase of sustained appreciation. Moreover, macroeconomic fundamentals remain solid. Expectations for Federal Reserve rate cuts are rising, fueled by recent U.S. employment and inflation data. With negative real interest rates and continuous dollar printing, investors are seeking safe alternatives to protect their capital. In this context, Bitcoin stands out as a prime option thanks to its programmed scarcity and censorship resistance. Adding to this, the approval of spot ETFs in the US has made it easier for institutional funds to enter the space, significantly boosting market liquidity. BlackRock, Fidelity, and ARK Invest continue to lead these inflows, with billions of dollars flowing into exchange-traded funds on a weekly basis. All of this contributes to the narrative that we re-witnessing a cycle unlike any before, more mature, better regulated, and backed by real institutional players. At the same time, governments and global companies are starting to recognize Bitcoin's role as a value preservation tool, opening the door for even larger corporate adoptions. However, not everything is smooth sailing in the crypto universe. Despite the strong upward movement, the RSI at 74 and the MACD above zero suggest caution. When taking leveraged positions, parabolic rallies always carry the risk of fast, aggressive corrections, especially if the Fed decides to delay rate cuts or if unexpected geopolitical shifts occur. That said, on-chain data remains bullish, with long-term addresses holding firm and even gradually increasing exposure. This reinforces the idea that Bitcoin is undergoing a process of internalization as a strategic reserve, both for individuals and organizations. Based on these factors, it's possible that this rally hasn't yet reached its peak, and that BTC will continue rising steadily. Supported by the $115,000 zone and targeting the next big milestone, at $120,000. If this trend continues with strong volume and consistent ETF inflows, the $150,000 mark may be closer than many expect. Stay tuned here on the channel for exclusive updates, deep dive analyses, and full coverage of everything happening in the crypto universe.